Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, November 13th. Well, mostly lower trade here across the ag space overnight. Corn right now is down about 1 to 2 cents. Wheat is down 5 to 7, let's call it. Bean complex lower across the board, 2 to 3 lower in beans. Meal is steady to about $2 lower, while bean oil is down another 30 to 40 points. Malaysian palm oil was down almost 1% overnight. That was following a 3.2% drop the previous evening. This despite the Indonesian government reaffirming they would implement the 40% mandatory biodiesel mix with palm oil, known as B40, starting at the beginning of next year. There was some speculation yesterday it may be pushed back a bit into the new year. That is up from the current 35% blend rate, and they would also stated they would look to increase that to B50 by 2026. Speculative traders, they were net sellers across the ag space yesterday, led by bean oil, where they were believed to have sold about 8,000 contracts. They also sold about 7,000 corn and beans, 6,000 wheat, and 3,000 in the meal. Speculative traders do remain long corn and bean oil, while being short beans, meal, and across the board in wheat. Also pressuring beans overnight were comments from an executive from Chinese agri-giant COFCO, who suggested Chinese bean imports may only reach 98.8 million metric tons in the 24-25 marketing year, well below the USDA forecast of 109 million metric tons. The source suggested that they were stockpiling beans here in the second half of 2024 ahead of the U.S. election, and that import demand, the balance of the marketing year, would be lighter than usual. The source went on to suggest imports from U.S. Would likely range between 20 and 25 million metric tons, depending just how U.S. and Chinese relations do evolve here under the Trump second term. U.S. corn and soybean harvest wrapping up with corn reaching 95% as of Sunday, beans 96%. Winter wheat plantings are up to 91%. That's a touch below both a year ago and the 5-year average. As the crop moves towards dormancy, we did see another 3% increase in crop conditions to 44%. Good to excellent, showing benefits from recent rains along the southern plains. They do remain below a year ago, however, where 47% of the crop was in good to excellent shape. Weekly ethanol production kicked back a day due to Monday's Veterans Day holiday, while export sales are out on a Friday. Tomorrow we do get out estimates from CONAB on the Brazilian crops. Forecasts for South America remain mostly favorable. Good rains across central and northern growing regions of Brazil this week. Areas to the south and into Argentina, a little bit drier for another 3-4 days before the next system over the weekend and into early next week provides the next batch of rain. Bean plantings in Brazil likely surpassing 80% this week, while in Argentina things are really starting to rev up at only 8% planted last week. These corn holding relatively firm, I think, compared to everything else, just below its recent high. Record yields and strong demand will likely keep a good floor below the market here, well above the $4 level. And I still think there's an outside chance we can see things trade back up to the $4.50 level by month end. We'll see if Jan 25 beans can hold above this $10 level. If not, I do not expect it to drift back down into the challenge old lows just below 975. In addition to exports on Friday, we also get a NOPA crush data from the month of October. New contract low overnight in the meal, and also a fresh 4-year low support in diesel oil. Next support in diesel oil comes in at 44.34, and also fresh 2 to 3 month lows here in the wheat, pressured by improved crop ratings here in the U.S., while U.S. wheat remains largely uncompetitive in the global marketplace. Thank you for listening, everyone. I hope you have a wonderful day.